Hey, what's going on? What's going on? Let me give you a moment here to get on. If you're watching the replay, make sure you hashtag replay so that I know that you were here, because my replay squad is everything. You guys are totally awesome. And I love my live viewers as well. I don't want my live viewers to think that, oh my gosh, she does not love us, because I love you guys too. Absolutely. So I'm going to give you a moment to get on. When you hop on, let me know who you are and where you're from. And you can feel free to skip ahead to about a minute and a half, 2 minutes to get to the content. So while you're jumping on, I'm going to be sharing this out to a few of my favorite spots. And we're going to get going. All right. I haven't popped up yet. Good morning. Good morning. There we go. All right, we get this shared out, and then we're going to get down with the get down. All right, and whoo, had a brain cramp there for a moment. All right, and okay, now that that's done, let me also get my link up here for my new book, my new ebook. All right. There we go. Hopefully I'm not typing in your ear. Oh my gosh. All right, there you go. Put that there. Awesome sauce. Okay, so sorry about that. But I'm done now. No more typing in the ears. All right, awesome. Okay, so like I said, when you hop on, let me know who you are, where you're from. Make sure we are cruising along here. Got my technology working. Everything is awesome. All right. Welcome to Home Biz Tax Talk. Today is episode 12. I am Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. And today I'm going to be sharing 5 tax tips for Bitcoin and other cryptocurrency. Okay, so, cryptocurrency is making a huge splash right now. It's one of those things that's, kind of been underground for a while, and now is becoming more mainstream. There's all kinds of programs out there available for you to purchase Bitcoin and everything. But what's not being shared so much is the tax implications, and that's because nobody knows those tax implications. It's not that they don't know, it's just they don't know to share. So that is why I am here. So I'm going to share with you today 5 tax tips for Bitcoin and other cryptocurrency, because, even though, Bitcoin is the most popular cryptocurrency, there are others that are popping up on the market. There's Ethereum. There's some other kind of coins that I see popping up. I don't even know their names, but Ethereum is the other one that I know. But mainly, we're dealing with Bitcoin. So I'm going to share with you 5 tax tips today that you need to be aware of in order to properly handle your Bitcoin. All right. Tip number 1 is that Bitcoin is considered property as far as the IRS is concerned. It is not currency. It is not legal tender in the United States or other countries. Okay. But I'm a tax professional in the United States, so I focus on the United States. But for those who might be outside the United States, a lot of countries are treating Bitcoin the same way. I definitely encourage you to review your local tax laws. But here in the United States, it's property. It is not currency. And the reason that it is not currency is that you can have only one legal tender at a time. And in the United States, that is the US dollar. So even though more and more people are accepting Bitcoin, that does not make it the legal tender of the United States. It's not considered foreign currency as well, like a Deutschmark or something like that. It is considered property, almost like a stock. Okay, so that is the first thing. So when you transfer it, when you exchange it for another medium, whether it's a local currency, whether that's here or elsewhere, or you buy something with your Bitcoin, like a car or a TV or something, that can trigger a capital gain or loss, which if it's a gain, that's going to be taxes. Okay. So number 2, your anonymity is going away. All right. So because the IRS has been slow to catch up to Bitcoin, listen, that does not mean that they're going to stay behind forever. All right. They're catching up. Okay. So your anonymity is going away. You know, on the tax streets, Bitcoin is seen as a haven for tax evaders. So the IRS is not going to be dumb forever. They're not dumb now. The technology is just slow to catch up. But once it catches up, it's on and popping. So the IRS has, it's called a Chainalysis software contract to identify digital wallets. So that means they can find who you are. So if you've got unreported income with your Bitcoin, you can be prosecuted for tax evasion. Okay, if you intentionally and willfully did not report your income, you could be prosecuted for tax evasion. And see, we're not talking about, okay, it's 1 year, 2 years. No, when the IRS builds a case against you, they're going deep. Okay, and understand that when we're talking about doing stuff illegally, fraud, tax evasion, there is no statute of limitations on that. So you can't say, oh, you can only go back 3 years. No, they can go back to your first Bitcoin purchase and prosecute you for tax evasion. Okay. And, you know, and I think the last case that I saw, the last update on the IRS Coinbase lawsuit, and see what happens is the IRS can use a John Doe summons. Like they can't say, well, I'm going to go ask for Susie Q. Here's a John Doe summons. We want everybody. And so they reduced that summons for those with transactions over $20,000. But that's just the start because there's so much, right? So those over $20,000, those are the people that are going first, okay? So it's only a matter of time before the IRS gets to everybody else. So don't think that you can hide with your Bitcoin. The other thing is with this anonymity is people think they can cash their Bitcoin out overseas and other currencies and think that is going to allow them to sidestep the IRS. No, 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 no. And the reason that is because there is a foreign reporting act that there's about 115 countries that are a part of this foreign reporting. So number one, as a U.S. citizen, you are required to report all of your worldwide income. So it doesn't matter if you earn it here, in China, Turkey, wherever, in the European Union, it doesn't matter. You are required to report your income, and over a certain amount, foreign countries report directly to the IRS. So after a certain amount, the IRS already knows. They're just waiting for you to essentially fess up, okay? And when you don't, again, it's not going to be 1 year, 2 year, whatever. Once it reaches over $10,000, oh. Yeah, they're coming for you, okay? Generally, $10,000 from what I've seen is like the magic number where they start coming for you when you owe the IRS, okay? So number two, anonymity is going away. Number three, not everything is a capital gain, okay? So when you get paid with your Bitcoin, let's talk about getting paid with the Bitcoin and understanding the whole capital gains thing, okay? So first of all, you have capital gains when you have a capital asset, all right? So a capital asset is an asset that you own for more than 1 year, all right? Now, if you get paid with Bitcoin, so if I, paid somebody for a service with Bitcoin, that is income to them, ordinary income. It's not a capital asset. It's treated as ordinary income. So your income tax rate will determine how much you get taxed. So that really just depends on how much money you make for the year. But with capital gains, though, let's say you purchase your Bitcoin and you hold it for 2 years. Now you have a capital asset. And so when you trade that Bitcoin out, then you're taxed at the capital gains rate, which is way more favorable than the ordinary income rate. Okay. I need for you guys to get this, because what I was just on, a live broadcast, and the broadcaster mentioned Bitcoin ATMs. I'm gonna need for you all to not treat your Bitcoin like normal dollars, because your goal is to get the capital gains rate, which is money, which is an asset held for more than a year. If you're going and exchanging your Bitcoin all willy-nilly, your tax rate is gonna fluctuate based on the amount of money you made that year. So the highest tax rate is 39.6%. So, all my Bitcoin millionaires and whatnot, if you're exchanging your Bitcoin after holding it for less than a year, you're going to be paying a 40% tax in addition to the sales tax or whatever you bought. All right. So not all Bitcoin is a capital asset. It really just depends on, number one, if you bought it and held it for more than a year. But if you received it as payment for a service, that's ordinary income and is taxed at the ordinary income rate. Okay. So, now, even number 4, okay, so, and I had a question about this. So number 4 is even small purchases trigger capital gains. So, just talking about, like I just mentioned, people using the Bitcoin ATMs. The other thing is using like the Bitcoin debit card to go pay for everyday purchases, like a coffee, like lunch or something like that. Guys, even those small purchases trigger capital gains. So if you go and spend, $4 on a cup of coffee at Starbucks and you use $4 worth of Bitcoin, but you might have paid a penny for the Bitcoin when you first bought it, right? Then you're going to have to pay capital gains on that $3.99. Okay, so even the small purchases, they're not exempt from this. Okay, so this is why, I hear people talking about, oh, you can withdraw your Bitcoin every day. Oh, look at this person, they just swiped their Bitcoin card and bought lunch, and they just swiped their Bitcoin card and bought a cup of coffee or something like that. Listen to me, you need to not be doing that. Okay, if you're going, I'm not telling you, I can't tell you how to do your money. Okay, I really can't. But if it were me, right? If it were me, if I'm going to exchange my Bitcoin, I'm going to exchange it in a lump sum, okay? And then spend that money, because it's easier to track for your capital gains, okay? It's just easier to track. So you think about, if I take out $1,000 worth of Bitcoin, okay, great, I got to worry about this $1,000 transaction, versus every day where I'm buying, going to Starbucks every day, buying coffee with my Bitcoin. You think about people who go to Starbucks every day, and I'm just using Starbucks just as an example. It can be McDonald's, I don't care. The fact is that if you're going to do this every day, 5 days a week, 20 days out the month, 240 days out the year, it is way easier to track one $1,000 transaction versus 240 little itty bitty transactions. Okay, this is what I'm saying, because the thing about it is that when you report these gains, you have to report all the transactions. So this is why your documentation is so important. And listen, guys, grab my new Bitcoin tax guide, because it goes into a deeper explanation so you can really see what this looks like. So like I said, it's easier to track one $1,000 transaction than 240 itty bitty transactions, okay? Because you have to have certain information for each one of those transactions. So It's not just the big ones that count, it's the little itty bitty ones that count as well. There's also a bill that's currently being sponsored in Congress. It has not been passed yet. It calls for tax exemptions for all transactions under $600. Like I said, it's introduced, but it hasn't passed yet. So got to keep an eye on that. All right, so that was number 4. Number 5, paying for services. So again, even though, Bitcoin is not legal tender, people are still accepting it. Okay, whatever. But when you're paying for services, you have to understand that it's still being treated like you're being paid in dollars. So if you're paying an employee with Bitcoin, you fall under the W-2. You still have to withhold employment taxes. You need to know the fair market value of the Bitcoin when you sell it to that person. That's essentially what you're doing when you sell it to that person. So you got to know the fair market value. You've got to withhold the proper employment tax. For the expense part, you still got to have all of your information when you purchased it, when you sold it, how much you paid for it. So you still fall under those guidelines. It's not one of those things where you can just give them some Bitcoin and call it a day. No, that's not how it works. If you're paying an independent contractor, if you pay over $600 in Bitcoin, if it's worth over $600, you have to issue the 1099. You still have to issue the W-2. So even though it's Bitcoin, it has an equated dollar value, and you have to follow the guidelines for that dollar value. Okay, whether it's a W-2, 1099, what have you, you got to do it. All right, and here's a bonus one. Okay, the Financial Crimes Enforcement Network is a part of the Treasury Department. So so I have people really asking me, how can I avoid the IRS on this whole Bitcoin thing? How can I avoid paying taxes on the Bitcoin? Well, you're not. So if you think that you're gonna, like I said, cash out your Bitcoin in a foreign currency and all of that, and the IRS isn't going to find out, that's what the Financial Crimes Enforcement Network is for. Okay, so and people, and these are the things that people don't know. So as a U.S. taxpayer, again, you have to report your worldwide income. It doesn't matter where you earn it in the world, where it's sitting in the world, you have to report that income. And like I said, with the Foreign Reporting Act, there's 115 countries that are reporting directly to the IRS, and vice versa. These revenue agencies are talking to each other. All right, that's what's happening. So I don't care if it's Switzerland, I don't care if it's Germany, that's what it is. So that's why they have the Financial Crimes Enforcement Network, in order to, really in order to catch the people that are really, committing tax evasion, the people that are really trying to dodge the IRS and not pay taxes on the income earned worldwide. So, so don't come to me saying, how can I not pay taxes? I'm going to tell you how to pay the least amount of taxes. That is what I do. But to try to avoid the IRS altogether, no, that's tax evasion. That's illegal, and you can go to jail. All right. So again, I encourage you to grab my new Bitcoin tax guide. It talks about, all the tax treatment with the IRS, and just the stuff that you need to know, okay? Because what we want to avoid happening is that you do get the nasty letter from the IRS saying, hey, according to what we have, you owe us X amount dating back to 2013 when you first started buying Bitcoin, and you pay us in 10 days or we'll be seeing you. All right. So that's it, you guys. It's Bitcoin is, it's increasing. People are gaining massive amounts of wealth with Bitcoin and cryptocurrency. I, see lots of people saying, here's how you multiply your Bitcoin. All of that's fantastic. But if you don't learn how to keep your Bitcoin on the tax end to stay on the right side of the law, it doesn't matter how much you earn. It's what's legal. okay, and what you're going to wind up having to pay. All right. So listen, that's it for me. That's it for Home Biz Tax Talk. Make sure you grab the tax guide. We are here Monday through Friday, 9 o'clock ish. And when we tune in, we talk about tax topics that are important to the home business industry. And right now, there's a lot of Bitcoin home business owners, and I need for you guys to get this. I promise you that. And if you need any help, of course, reach out to me, book a consult, and we can definitely talk about it. All right. Have a fantastic day, you guys. I'll see you next time. Bye.